Hey everyone, my name is Dave Silliman. This was just wanted to give you guys a quick update. My thoughts kind of on what's going on with this whole coronavirus stuff. There's a lot of questions that we've been getting asked on how is this, what is going on in the market, how is this going to impact opportunity zone funds, opportunity zones. Is there going to be anything of this program, moving forward after this? What's going to happen to businesses during this time frame? There's a lot of panic that's going on right now. There's a lot of good information, a lot of bad information, a lot of preparedness, obviously, as the government basically in the country seems to be not necessarily, coming to a grinding halt, but definitely to a very much of a quick standstill. So what I want to do is kind of talk about really the positives of what is actually going on in the Opportunity Zone Fund market space. So what I want to do is kind of put together a little whiteboard here, just kind of explaining really what's been going on. And what we've got is pretty simple. If you've been following the stock markets or anything else to that nature, you've seen the huge wild swings, both up, both down, but overall, significantly down. We're down now, I think, at least 7, almost 8,000 points from our highs. And what we look at that is we really need to understand, well, what does that mean? All right, there's a mass exodus in the stock market. So what does that mean to opportunity zones, opportunity funds, and more specifically, what does it mean to opportunity zone businesses? So kind of breaking down some of the economics. If we take a look, we got a pretty basic chart here, coming up to $100 billion in gains, how many years this program's been going out for, year 1, year 2, year 3. We took a look, year 1, the very, very first year this program rolled out, we had about $15 billion in capital gains. All of that was real estate based, all right? Year 2, last year, 2019, we saw about $30 billion. The vast majority of it, again, real estate based. Moving in now into 2020, right here, we're already down into this close to $7-10 billion mark. This is starting to split. This is really starting to be right now a 90-10 ratio. And what does that mean? It means that it's starting to break from the real estate to the business. Now, what has been driving the real estate aspect of this was, number 1, the real estate market is what really kind of set off this program. Number 2, this money, year 1 and year 2, is predominantly from family offices, RIAs. We're just now starting to see the larger scale institutions, the broker dealers, begin to kind of get into this. But what we're going to see is that we've had $70 billion in capital gain exits out of our stock market, out of the Dow, out of the NASDAQ, out of the OTC market, out of all of the publicly traded markets, the S&P, all of it. We've had about a $70 billion positive capital gain exiting that market space. Now, unlike this market space right here, your year 1 and your year 2, where this was predominantly real estate, what you've got here is you've got capital gain money. And the question is really, where is it coming from? Well, it's coming from the businesses that are, already in the stock market. So what you've got is a different type of mentality of an investor, a wave of investment money that I believe is getting ready to hit the opportunity zone market space. The other thing that you've got is right now only 20% of all the QOFs, all the qualified opportunity funds, are business based. That's it. So you've got a huge wave of business-based savvy investors thinking and used to looking at businesses first, but you've only got a 20% market saturation rate of business-based QOFs. So we take a look at this. I believe what we're going to see this year is a huge wave of a new type of investor, and it's going to be the individual investors that are pulling out of the stock market. They're going to be used to looking at businesses, and their focus is going to be in this right here. They're going to be used to businesses. That's what they're predominantly have invested in. It's what they made their gains in. It's what they've exited. They're a little bit more risky. or their risk tolerance is higher as an investor. And so they're going to be more apt at looking at QOFs that are business-based first, and then having to, educate them on the real estate. What we saw in this section right here is they also had a section 1031, which is where a lot of this money also came from, all right? For this investor over here who's exiting the stock market, the 1031 exchange program was a second bite at the tax apple. Well, actually, that was the first bite for real estate. Opportunity funds are the second bite. But the same legislation that gave us all of this also was part of a grouping of legislations that removed the 1031 ability for stocks, which means that the only option for this group of investors, this new wave of capital gain money coming out of the current stock market, is going to be opportunity funds. And the thing about this is these typically are going to be on the 180-day clock. And the reason why is because their gains are not from a K1 on a real estate transaction. So they're not going to get the application, the extended time frame to the end of the year. Their clock started last week in a lot of these cases. And this is something that's a brand new program for this whole entire grouping of capital gain investors to be able to grasp and get a hold of. This market space, for the QOF market space, I would actually expect a bump up in investing significantly in QOFs, especially the business-based ones. I would also expect to see that if you're a business in this market space, now's the time to set up a QOF around your business for the purpose of this money being able to invest into your business via your business-based QOF. I think that we're also going to see a lot of these type of investors are going to pull together and create their own QOFs. But this is definitely going to be a major tidal wave in the opportunity zone funding market space, simply because of the fact that it is a whole different type of animal in the terms of investor that is now getting ready to enter into this market. See, up until now, we've had nothing but a rising stock market. So this grouping of stock-based capital gain investors would have had no real reason to want to pull their money out of the stock market, which means no reason for them to need to take a look at the QOF other than this, say, hey, it's an interesting side subject. But now that they've exited, and there's really no floor in sight, we're seeing quantitative easing measures. We're seeing the Feds have dropped the Fed funds rate down to 0.25, basically zeroing it out. We're going to definitely see a lot of these investors that are all of a sudden, what they dismissed year one and year two, are all of a sudden going to be taking a look at with year three. And so if you're in the opportunity zone market space, if this is something that you've got questions about, reach out to us at easydoit.com. That's EAZYDOIT.com. We'd love to be able to walk you through how a QOF can impact your business, and really, most importantly, how you can take advantage of setting up an opportunity zone fund. With that, I hope that you guys stay safe during this coronavirus hysteria. Keep in mind that the flow of money is not going to stop just because people are going to be at home. As a matter of fact, I would anticipate that the research on this subject matter is probably going to significantly go through the roof. So I would tell you, you should be really kind of looking at this and saying, all right, you've got a short-term market space that is going to be a lot more volatile. And that short-term volatility will impact the opportunity zone market space in a very positive way short term. And by design, this opportunity zone, opportunity fund market space, by design has the time built in to absorb and withstand any short-term market turbulence. This is going to be great for future real estate-based opportunity zones, deals, projects, the ability to leverage with the discounted Fed funds. It's going to have an impact on the LIBOR rate. It's going to have an impact on the Treasury rates. It has an impact. Well, we're already seeing the impact on the Treasury rates. It's going to have an impact on the SOFR rate, all of which is going to impact leverage capabilities in the future, along with the 200 different federal incentives that are out there to try to help expand this program. So yes, the country might be going through a little bit of a virus mania right now, but I would anticipate that this is only going to build up and really, really explode. Stay safe, guys. I hope that you find this message encouraging.